Good morning, everybody. Market Michael here. Now, let me walk you through the economic data that just came out, guys. Personal income, PCE, personal spending. Let's go through this. Personal income remained flat. We were expecting higher, so that was a miss. Now, personal spending increased by 0.4%. It was zero. What are they spending money on? I think I know. We have to look at the PCE and find out. PCE was a negative point. Okay, so PCE was flat, but core PCE was up. Now I have to figure out what the core PCE takes out. For instance, the less volatile measure is the core PCE, which excludes more volatile seasonal foods and energy prices. So the core was up. That's funny because the core is more volatile than. Oh, it was the less volatile, and it was up more. It had the change. We got the expected 0% gain for the prices, but for the PCE prices, but we didn't. But we got a gain, or we got this. We got what was expected and the prior month of 0.2%. So, what's the difference between PCE and CPI? Well, CPI is a survey for households. PCE is a survey for businesses. The CPI measures housing, uh, and this includes rent. But CPI measures out-of-pocket healthcare costs, whereas PCE measures healthcare costs in what it would cost a third party. So, what we're seeing is that people are spending more on healthcare. Interesting. As well as not necessarily food, but that's funny that the core is up 0.2, whereas the regular is up nothing. Very interesting. At 9:45 we get that Chicago PMI, and that pending home sales comes in at 10 o'clock. So I'll make a video around 10 covering that PMI and the home sales, just so it's not jam-packed. Okay. Well, I don't know, guys. To me, this doesn't seem. Some latest news. Inflation hits 2% target. Possible prelude to faster rise in interest rates, which would pop the bubble. The PCE index, the Fed's preferred inflation gauge, rose to 2% over a year from 1.7% pace in February, hitting the central bank's target for the first time in a year. The 12-month increase is a mere closely followed core rate of inflation close behind, rising to 1.9% in March from the 1.6%. It says here we got a 0% for the core. The PC index was unchanged in March. There you go. And the core rose to 0.2. Yeah. Inflation figures are included in the government's monthly report on consumer spending. Outlays rose 0.4% to mark the first advance since the end of 2017. And an outlay is the sum of PCE, personal interest payments and personal current transfer payments. So it was more. People are paying more money. Incomes climbed 0.3%. Both figures were in line with Wall Street's expectations. Inflation had been increasing steadily for months, owing to rising costs of oil, higher home prices, tighter labor market, and a strong U.S. economy. Prices pressures aren't likely to ease up much either. Correct. We're going to have more inflation in terms of assets. Oil's going up, even though we're coming back down for right now. We are going to go back up in the long run. That housing market is still rising, and again, all the costs are rising, so it's going to cost more to rent as well. Consumer spending, as well as the interest rates. So the person who owns the house, who probably has a mortgage on it, has to pay these higher rates. So they're going to have to charge more. Consumer spending, meanwhile, rose for the first time in 3 months. America spent more on new cars, trucks in March and paid more for heat to power their homes. So we spent more on cars and trucks. I don't know how. I don't know how we managed to. That doesn't make sense. All of this data is conflicting, guys. They tell us this data says 1 minute, um, you know, like we're not buying cars and trucks. Next minute we are. Next minute, Ford is making is reducing their lineup because they're not selling anything and they're losing money. Big picture, the U.S. economy is growing soundly, nearly 9 years into an economic expansion, but it was inevitable that such long period of growth would eventually trigger higher inflation. I, it's so fucking ridiculous, the fact that these fucking clowns call inflation growth. It's not fucking growth. You don't get real growth from money printed out of thin air. You get growth from savings. And you just don't fucking fractionally lend out money for nothing. You have to fucking people have to work for money. They have to earn it. Once you have that capital saved, then you could spend it on something else. Then you could invest it. Then you could do all this shit. Such bullshit, because this is what they're trying to spin to you guys, and it's absolutely ridiculous, and it's a disgrace. Inflation is still quite low by historical standards. The Fed might be inclined to raise U.S. rates more aggressively. Treasury rates expected to rise, and stocks could also take a hit. Higher rates tend to draw money out of equities into bonds. You like that, guys? Jesus Christ. Listen, guys, this is not really. Again, this data is mixed. You could say it's good. They're saying the economy's fucking growing. Are you kidding me? Are you fucking kidding me? It doesn't make sense. If you have fucking one cell, you have one fucking brain cell, you have 10 neurons in your fucking brain, you could see that this is just bullshit. Can you smell it? I smell it through my fucking computer screen. Well, on that fucking ugly bombshell, I'm going to have to leave you guys off with this beautiful information. Let's go ahead and check out what markets are doing. Now, looks like markets kind of dipped a little bit here. We're getting lower lows, continuing this downtrend, backing off from resistance. In the case of the Dow and S&P, well, the Dow is absolutely rocketed to resistance levels here. Let's check it out. The Dow is on a more positive trend than the Nasdaq. Very interesting. Interesting. We'll see how these trends manifest in the market. We've had a continual uptrend. I doubt we'll break through that 38%. For that S&P 500, I think we're headed to that, well, not the 500. This is the futures, guys. So the futures, we're headed lower. It's 847. That's about it, guys. This downtrend is continuing to take hold, backing off of highs for the S&P and Nasdaq, but Dow is steadily rising, about to bounce off the top. Now, let's look at some other things. We still have gold and the dollar bouncing, not bouncing, but still falling. But it looks like at least gold has kind of leveled off to 1313, and silver is still taking a hit, but leveled off a little bit. Here we have the dollar actually trading, popped above, and has gotten to this resistance level. I'm curious to see what's going to happen during the trading day, whether the dollar is going to continue this uptrend and pass through this resistance, or it's going to fail. To me, it looks like it's going to fail. We didn't establish higher highs, but we didn't necessarily get lower lows either, so this trend could go either way. We have to keep an eye on it. We got the 10-year popped up a little bit at 2.968, but we hit a low of 2.953. It looks like this trend is going to go up. I think that's the trend. I think what's going to happen is the Fed is going to kill this economy by raising rates too much. And by doing so, the 10-year is going to sell off. And the rest of the world's going to dump their treasury bonds into the market. So, with all that being said, guys, I'm going to have to leave you guys off with a horrible taste in your mouth from listening to me rant about the economy. On this 30-minute chart, we just started to hit negative MACD, although we've completely low-sided with the CCI. We're going the trend has been down for the most part. Otherwise, this Dow Jones has been up. We could still go down a little more, but to me, I don't know. This could continue this uptrend, but you got to sell in May and go away. I think that's the keynote here. I think markets are going to take a turn for the worse. As fast as this market went up, we're going to go down. It's not looking too hot, but it seems like on shorter time frames, like a 5-minute or a 1-minute, that we're already bouncing off the bottom for underbought. Again, Dow Jones continues to uptrend. To me, this doesn't really look good for Nasdaq, and that's where the heart of growth. You see, guys, it's growth. Oh my God, lies. So thank you very much, guys, and I'll see you later. I'll see you around 10 o'clock, perhaps, for that. What am I looking for? The PMI and pending home sales. So Chicago PMI comes out at 9:45. If you want, go ahead, look at it before I cover it. But I'll cover both, and I'll go into detail with them and kind of walk you through what is going on. So thank you very much, guys. Please like and subscribe, and have a great day.